What's up, traders? Hope you're having a great weekend because, man, last week for a lot of people was not very good. Whether you're in stocks or crypto, I've been hanging out with a lot of friends of all different age groups. If you're a boomer, you're worried that the stock market's not going to hold up for you to retire. If you're in crypto, you're wondering if you're going to be that millionaire you thought you were a couple of years ago. Well, I don't know. But these are the times that really test patience. You got to remember, we came off a historic 2021, and these things come to an end. I like this quote from Chris Cole that I heard in the videos I've been watching of him recently, where he considers us as traders and investors mental athletes. And so it's important that we keep our mental health in shape. And whatever you got to do, meditation, getting exercise, all the above, do it and be ready. And for that, let's start looking at what we're going to do this week. So, looking at the stock market first, represented by the the E-mini S&P futures, still holding right above that February 24th Russian invasion of Ukraine low. I am looking at that as a line in the sand. As long as we hold that, I'm going to say it's just a correction. But if it breaks, if we get a good solid close, and we very well could this week, then I'm going to start looking at some contingencies. And so, where's that going to be? Well, just like a lot of stocks recently, I'm going to measure out from the COVID low because that's all important up to the most recent all time high. And really and truly, if we break through this support here, I'm going to look for a retracement down to 3491. Let's call it 3500 to be nice and even. So be watching for that. Until then, though, I'm still considering this a correction because the VIX has not yet confirmed with a higher high just yet that the market is pricing in that kind of volatility. That's interesting. It's a divergence, and this divergence has held the correction this whole time. So that's what I'm going to be watching. But these closes, these daily closes, have been going up on the VIX. So watch that. These lower highs, that's what we're watching. If we start to get a breakout, maybe into the high 30s, 40 VIX, that would confirm the correction is going to continue. So watch that. NASDAQ has already given up that low. So has the Russell, but I'm going to choose one to key off of. The S&P 500 is going to hold everything up. Now, last week was so crazy, due in part to almost a quarter of S&P 500 stocks reporting earnings. So if you could survive last week, things are going to slow down. Whatever direction it goes, there's going to be less coming out. Still a lot of earnings to go, but keep an eye on that. All right, crypto. So this fall off from the March rally, which was a risk on rally, nothing seems to be secular from what happened at the end of March. That's this rally up here. And Bitcoin wasn't really the driver. Really and truly, when Ethereum got to a resistance of 3,500 right there on April 3rd, the whole market for whatever crypto you were looking at turned on that. Now, Ethereum, because I'm looking at it as the dominant player, it's done something rather concerning. So it had a chance this last week on April 25th to spike down what I like to see a false breakout, but it did not reverse. In fact, this is continuing. And now you're getting into where I go back to my Ichimoku analysis, where we really look to see if the trend has been confirmed. Price is already on the bearish side of the cloud. Momentum was going to confirm it. That timing, that is slowly getting down. There's not full bearish yet, but it is a fantastic tool. If you go back and do research, I've done many videos on it. When you see price cross the cloud with momentum matching, that is your confirmed breakout. Very simple. And then likewise, when you see it on the upside, every single, well, let me not say every, but the major trends, if you go back in history and you look, have been contained by the cloud. Check out some of my videos. Do a search for Norok, Ichimoku, and crypto, I think, actually. So, not yet. It has not broken out just yet. Bitcoin, though, on the other hand, it has, in fact, actually begun to confirm this bearish trend. This breakout that it was trying to make to the upside just fizzled out. One thing that I've been watching closely is the Ethereum Bitcoin cross. I had a thesis this was actually going to increase, but it stayed consistent, and now Ethereum is actually starting to lose a little bit of ground to Bitcoin, which makes a little bit of sense because when the market is feeling uncertain in crypto, it goes to what tends to be the quote unquote safe haven asset of Bitcoin. And so when people get nervous, they either go to Tether or Bitcoin. I know I've got some stuff to say about that stable coins in the near future, but we'll save a video for that. Let's look at commodities. Oil. Oil, as I've said, has done a very consistent hold of its 50% retracement at, let's call it 97. And I've been saying for weeks, and I'm going to keep saying it, I think it's just going to range around 100 for a very long time. I think supply has met demand, and it's all true in oil. Gold and silver, well, it gave up this rally and has just been falling off this breakout that all the FUD sellers were trying to get people to buy gold on. It just did not materialize. And rather than making a new high relative to the August 2020 high, it looks like a false breakout. That's not good. That's not good. Silver, same thing, except even worse. I actually tried to play this breakout, got out when it invalidated the breakout, and a lot of people question that. A lot of people said that I should stay in the instrument I use, which pays a dividend. However, that works. Don't care. Silver was not breaking out. And when it doesn't complete that breakout, this is the kind of thing you have to fear. You have to fear that failure. And so you got to be honest with yourself. If you want something to break out, if you're playing a breakout, if you're playing price to rise and continue to rise, then it needs to continue to rise. So it's not. All right. Whew, this is going to be painful. Google. Yikes. So I've been saying this for a while that the last week, the week before last, before earnings, we had this Friday, April 22nd, that closed to break the Russian invasion February 24th and January 24th low. This was so key. And I thought that this rally was the start of the pre split rally. It could still have a pre split rally, but unfortunately now it's coming from a loss. Man, earnings really tanked it. This season, in a bull market, it doesn't care. If earnings are bad, stock go up. Earnings are neutral, stock go up. Earnings are good, stock go up big. Well, this market not being definitively bullish is punishing bad earnings. And so Google, bad earnings, already tanked it even lower. But really, I'm saying that I should have probably followed my rules right here, but now I'm an investor. I'm okay bag holding Google. And I'm just going to have to be because it's Google. And I have a very long term thesis on this, as opposed to a lot of the growth stocks out there. Amazon, same story. I'm an investor. It's okay. It's Amazon. But again, right before earnings, it was playing around with that low. And man, the whole market was really looking at Amazon earnings. That's really what killed it on Friday of last week, for sure. Down 14%. Yikes. Well, that's just this earnings season. What about some of the actual good winners? Waste management. Need to watch this. Need to watch to see if we're actually going to get a little bit more bullish side to confirm this as a breakout. Otherwise, again, this could be a false breakout of the top on waste management. And though it is a great entry coming off of that Russian invasion, February 24th, which brought it incidentally down to the 50% retracement. Beautiful hit right there where I got in. Now I might be getting close to tanking profit if this doesn't continue. Costco. Costco's retraced a lot. Costco has, but I still like this. I still like the value plays. Coca-Cola coming down a lot, but it's off of a good rally. All the values seem to be holding up, even ExxonMobil. People still apparently need to buy gasoline. So those are the individual stocks and what I'm going to be looking at this week. As I said, become a little bit of an investor here with Amazon and Comcast. Oh, one more I want to update on Activision Blizzard. Now, this is a merger arbitrage trade, which I still feel very confident in. And as a contrarian, I've been reading a lot of FUD articles. I've been reading a lot of FUD articles talking about how people don't think the deal is going to go through. They think it's going to be blocked by the regulators. Well, FUD. It just got approved last week by the shareholders. This deal is voted on. It's only going to make the third largest gaming company. So the argument for an antitrust doesn't seem very valid. I like the FUD. I like the FUD. I'm still very confident in this play should it close June 2023. So I'm going to stay consistent. I'm going to hold on to my 2022 theses, and we will see what happens in the week to come. As always, I hope this is helpful. Keep your risk low if you're losing, trade smaller, and stay positive mentally and healthily. All right. Trade wisely, guys. We'll see you this week.